Assalamu alaikum and welcome to the Oasis Focus and Finance Show. I'm your host, Shaikh Morton. As always, it's great to be with you. Just a matter of 2 weeks ago, the world leadership met at Davos in Switzerland for the annual World Economic Forum. This year's theme was the Fourth Industrial Revolution, which had a look at digital transformation and its ability to impact on social income levels and the quality of life around the globe. Of course, in South Africa, this has implications for us in terms of mechanization in industry, how it affects the labor market, job security, and of course, human development. In this evening's show, we will unpack what happened at Davos in Switzerland. Should you wish to watch this show or any others, tune into the Oasis Crescent YouTube channel. Details will be up on screen during the show. In this evening's show, we are joined by members of the Oasis investment team, Daniel King and Fahad Shaikh. Gentlemen, assalamu alaikum. Welcome to the show.
Wa alaikum salam, Shafiq.
Fahad, we start off with you first. What is the point, what is the purpose of the World Economic Forum and the annual meetings?
Shafiq, if we look at the World Economic Forum, it basically aims to be an impartial forum where world leaders, business leaders, people from the civil society all come together to discuss some of the issues that the world is facing and also to form agendas in terms of how you tackle those issues. So if you look at it from the 1970s, every year all these people gather in Davos to discuss these issues and then, as I said, form agendas in terms of how to address them. So it will be people from your business leaders, your political leaders, your top scientists, your Nobel laureates. So it's a very diversified range of people who attend this event. And obviously it's the discussions within them, the different viewpoints that come forward, which actually gives us a bit of a feel of how, what the issues are and how they need to be tackled.
If I can add to that, it's also an important place for countries like South Africa to go to sell the country from a policy perspective, from a business perspective. So, many of our economic ministers and our president will be there each year selling the country to investors, essentially. And many of our business leaders will be there networking, trying to stimulate investment in their industries as well.
Now, Daniel, the theme this year was something called digital transformation. Can you give us a quick overview of actually what happened this year?
Yeah. Well, the theme was specifically the Fourth Industrial Revolution. Many of our viewers might be wondering, what happened to the Second and Third Industrial Revolution? Typically we're only taught about the Industrial Revolution, which took place in the UK between the 1700s and the 1800s. But really what we're talking about is different phases of technology that have impacted the way we produce goods and services over the last 300 years or so, since the initial Industrial Revolution that we're all taught about, which was associated with the rise of water and steam power that was used to mechanize production, generate mass manufacturing production. So that culminated really in the US in the 1950s, developed over the early 1900s, culminating with the rise of Fordism, where Henry Ford, started the mass manufacture of cars in the United States. Later on in the 1900s, we saw the Third Industrial Revolution, or the third phase of technological progress over the last 300 years, where we saw the rise of automation, electronics, through the use of electronics and information technology. That really occurred between the 1970s and the 1990s. And what we're seeing now, the Fourth Industrial Revolution, is really just building on that. So it's changing the way we do business through the internet, for example, primarily, but also through other technologies in the new millennium. So what are we actually talking about here? Well, for example, the World Economic Forum at this meeting did a survey of 800 tech leaders, and it emerged that 92% of them believe that by 2025 we will be wearing clothes that are connected to the internet. So that's a massive change in the way we live our lives. 80% of them thought that 3D cars would probably be in production over the next 10 years already. Most of them believe we'll see at least 10% of cars on the road being driverless. So that's why we're framing it as an industrial revolution, because it really is revolutionary in terms of the way we live, the way we do business. You can see there's massive potential in this revolution in making our lives safer, healthier, easier to live, more efficient. But there's also risks, if these kinds of technologies fall into the wrong hands. A country like North Korea comes to mind immediately. There are obviously risks associated with weapons development, which is why the World Economic Forum has really focused on this theme this year, trying to start the conversation around ways we can build a more constructive society around this massive potential.
It's interesting to see that my tie could even be connected to the internet. Our ties could be talking to each other in the future.
Yeah.
But on a more serious note, Fahad, I mean, we see that the fourth industrial revolution and digital transformation has led to something called artificial intelligence. For example, a robot can do domestic work, and I'm sure in the factory place as well. How could this impact on the labor market? I mean, how do we understand it in those terms?
Shafiq, I think we need to keep it in mind, like Daniel indicated, this is not the first time the world is going through this process. We've had these industrial revolutions before. New technologies have come up. Some of the older technologies have gone extinct. I mean, when's the last time you saw a typewriter, for example? Similarly, even from a jobs point of view, there are new jobs that are created as there's innovation, as there's industrialization, as we move through these processes. But at the same time, there are some jobs which go extinct because the technology goes extinct. Jobs associated with that kind of go away as well. But I think rather than looking at that negatively, we need to keep in mind that throughout history, humans have adapted to this change. So I think as we've moved up the curve in terms of innovation, humans have upskilled themselves to adapt their jobs or to adapt their skill base to what's required by the world. And if you look at it over the very long term, all these innovations, all this industrialization, what it has meant is that your quality of life for human beings on average have improved. On average, human beings are more wealthier than what they used to be. So the efficiency and the lowering of cost that this industrialization and this innovation has brought about, over the long term has been very beneficial. But yes, over the short term, there could be disruptive forces at play. But as human beings, historically, we have shown that we have the capability to adapt to these changes.
So just to add to that, obviously we can't foresee which way it's going to go over the next 50 years. There are multiple possibilities that could occur depending on how we as a society manage the process. But ultimately, technological progress is a positive thing for the wealth of the man on the street. We're witnessing, for example, in energy markets, new technologies suppressing the cost of things like oil, other energies, and really making everyone richer for it. So yes, there are industries that are impacted negatively from an employment perspective, but ultimately the consumer benefits and the world benefits over the long term.
Daniel, how can South African policymakers become involved in this? I mean, what would you perhaps advise, or what would we discuss in terms of a South African policymaker coming to terms with the fourth industrial revolution, which must impact developing societies quite profoundly?
I think that it's an important point because the complexities of governance are changing quite quickly these days. Current systems of governance really evolved around the second industrial revolution, when policymakers had the opportunity to study a specific issue and develop a response in good time. That's no longer really feasible. Information travels at the speed of light these days. So legislators and regulators are being challenged like they've never been challenged before. As we saw, in South Africa over the last year, for example, basically our legislators, our government needs to become more adaptable in managing this process. They need to make sure that they understand the technology and the industries that they're regulating. And the way they can achieve that is through more of an interaction, more of a coordination with the business sector and the private sector in general. So they need to collaborate more closely with business and civil society. Another important thing that may emerge from this process as technologies arise, there is a transition period in which some people lose their jobs, some people gain jobs, but there's typically a more uncomfortable transition period, which is why we're having these discussions these days. And so the role of government in that scenario really is as a kind of safety net as people undergo that transition, as they try to skill up for the next kind of wave of technological progress. The temporarily unemployed should really be supported in that scenario. If your jobs become obsolete, by a new technology, I mean, that's not really something that's your personal fault. You know, that's the reason that governments exist, to provide that safety net through some kind of social insurance. You know, countries like the US are already looking at that quite seriously. And South Africa is in a fairly strong position compared to our emerging market peers. We already do have quite a strong social safety net compared to other emerging markets, so the foundation really is in place for that.
We've spoken about government's responsibility, government's role in all of this. What about individual adaptability or individual responsibility within this whole digital transformative landscape?
Shafiq, I think the most important thing is that as individuals, you know, given the short-term disruptions that these technologies might bring about, we need to make sure that we continue to educate ourselves. We need to make sure we continue to skill up. Because if you think about it, with this technological revolution coming through, the jobs or the areas which are most at risk would be where it's a very process-driven sort of job. But if you think about any job which requires creativity, or which needs individuals to adopt to different environments or circumstances, if you think of scientists or lawyers or entertainers or musicians, you know, those sort of jobs will always be required. So I think it's very important that we...
So YouTube has a future.
Yeah, Shafiq. And then also if you think about, but that's one side of it. Mm-hmm. On the flip side, to make sure that if there are short-term disruptions, like Daniel mentioned earlier, it's not, you know, by the fault of any single individual. But if somehow you're in a sector which is exposed to those short-term disruptions or changes, you need to make sure you have enough of a safety net. So that means that you should make sure that you remain as debt-free as possible. That means that you continue to invest or save invest your savings with the good mix of growth and income instruments. Make sure that you have a safety net during the time, if God forbid you are in a situation where you are impacted by these changes. So I think those are the key responsibilities that we as individuals or human beings need to take on ourselves.
Daniel, of course, this must be very challenging for small to medium-sized business enterprises who may not have all the tools that the big corporates might have. So how do we understand this landscape, the challenges for the SMMEs?
I think that the principles are very similar to how an individual would approach it. So remaining adaptable is important for any SMEs. Maintaining a strong balance sheet is one of the most important things that you can do to remain adaptable to change. That means little to no debt, as much cash or net investments as possible, as opposed to indebtedness over the long term. In terms of your environment, maintaining regular customer feedback is going to be very increasingly important. Conducting regular needs analysis. How is your customers' needs evolving in line with the new technological landscape? It's very important to remain adaptable from that perspective as well. Staying informed about new trends is very important in today's world. And then incorporating best business practices in terms of your processes and procedures. Technology these days, through the more intensive use of the internet, is really allowing bigger firms to kind of cut back on costs. And SMEs as well could really benefit from kind of incorporating those into their business processes. So flexibility will be very key in a world of unpredictable changes over the next few decades. Those with accumulated savings as opposed to debt can put those savings to work in emerging industries rather than dying industries. That's a very important benefit from remaining kind of as debt-free as possible. So whether from an individual or business owner perspective, it's going to be important to kind of put away your monthly savings in order to build up a buffer which you can use to smooth out the impact of technological shocks, whether it be on your business or on your employment prospects, for example.
Fahad, it seems like the whole investment landscape is going to change, perhaps quite dramatically. So how would you approach this from what we would call a stock-picking perspective?
Shafiq, at Oasis, we've been very consistent in terms of our investment philosophy, where we're really looking for market-leading companies which can sustainably, and I think that's important, sustainably generate superior returns through the cycle, and who can adapt, or industries where there are high barriers to entry for new competition to come in. So just to give you some examples, if you just look at the retail landscape, for example, changing very rapidly. Not so much in South Africa yet, but eventually even over here. E-commerce has been gaining significant traction if you look at it in some of the developed markets in US and in Europe, for example. So again, within the retail landscape, there will be some winners and losers. Winners will be the one who develop the capabilities, adapt to the changing environment, and have what we call an omni-channel offering, which includes selling through the internet, for example. So there'll be winners there. Similarly, we spoke about how some of the medium-sized businesses are using technology to reduce their cost. So I mean, think of something like teleconferencing or video conferencing rather than actually flying out for a meeting. Now, who are the beneficiaries of that? If you look at some of the telecommunication companies, as people use more technology, as people use more data, your data usage increases, some of the telecommunication companies become very important. So if you look at our global portfolios, we've got very strong exposure to leading companies in the US like AT&T and Verizon, for example, who benefit because of this. Then on the technology side, again, if you look at someone like Microsoft, or someone like on the healthcare side, if you look at someone like Pfizer, these companies are amongst the top 10 companies in the world in terms of how much they're spending on research and development, on making sure that their product and services remain relevant and that they adopt to the changing environment. So again, across the space, there will be winners and losers, and it's our job to make sure that we're investing in companies which have strong balance sheets, sustainable business models, and in some of these innovations that are taking place, investing behind companies which will continue to remain relevant and generate superior profitability. Similarly, I think an example very close to home, if you look at how Netflix just came into South Africa, I think a few weeks ago, you need to think about the implications that has on cable TV operators, for example, your DSTV or your MultiChoice. Going forward, there will be more competition for the content that's coming into the market. Consumers have more choice. So that also highlights areas where we're not investing in, for example, and we're cautious in terms of those cable operators or DSTV or MultiChoice or companies like Naspers, where competition is increasing and maybe they're not evolving at the same pace that they need to maintain their market share. So I think that just gives you some of the thinking behind the investment process and the stock picking we're doing here at Oasis.
Now, if I could, on a broader basis, how does a company like Oasis meet up with all these challenges and all these changes?
I think Daniel highlighted a very good point, which stands for individuals and businesses both. Oasis, since its inception, one of the business philosophies has been to remain debt-free, using the cash that we generate ourselves to invest in the business and to grow the business. So I think not having any debt or not taking any debt gives the business a lot of flexibility to make sure that we continue to invest, we continue to evolve, adapt as times change, as technologies change. At the same time, if you look at all the investments we've made into technology, from an investment side, from a client servicing side, from an asset administration side, we've made sure we use the best-in-class technology, best-in-class systems to make sure we stay ahead of where the market is evolving. And then on the stock side, in terms of our own investments, we already spoke a bit around that, investing in companies which we know can sustainably generate returns through the cycle, adapt, continue to maintain their market share, continue to maintain their market leadership. And obviously that will come through in terms of rewarding our clients.
Similarly, in terms of our investment philosophy, I mean, that's really resilient to things like technological change, risks. We often talk about the principles of diversification. And in the context of unpredictability and change in the world, the value of diversification really comes through. Because if you're exposed to one particular sector that is disrupted by a new technology, you've got other sectors of exposure that kind of have the potential to offset that downside. So it's really the philosophy of diversification and downside protection that we believe will continue to serve us well, even as the fourth industrial revolution gets really underway.
Daniel, we've been discussing the fourth industrial revolution, a very interesting topic, lots of challenges, very exciting. Your final thoughts on this?
If our viewers can take one thing away from this is that this technological progress is not something external that is simply happening to us as a society. As a society, we have the potential, the power to kind of guide its evolution over the next 50 years, and which is why we're having discussions like we see in Davos recently. So yes, there is the potential in its most pessimistic form for basically robots to kind of replace you in your current employment, but as a complement to the best parts of global economics and humanity, it can really lead to more efficiency and wealth for society at large. What it requires is that today's decision makers and strategists kind of remove themselves from the historical pattern of linear thinking and become more adaptable, more multidimensional in your strategy, in your thinking. Then we'll see the true value of these new technologies and of the fourth industrial revolution.
Daniel and Fahad, thanks for being on the show this evening.
Thank you.
Thank you.
You have been watching the Oasis Focus on Finance show. Our guests in studio this evening were Fahad Shaikh and Daniel King, and we were discussing the fourth industrial revolution, which was the main theme of the recent World Economic Forum held in Davos, Switzerland. Should you wish to watch this and any of our other shows, tune into the Oasis Crescent YouTube channel or info@oasiscrescent.com. Until next time, I'm Shaikh Morton. Assalamu alaikum wa rahmatullah.